the big wealth that's been built in this space that has not really come from trading the squiggles. I think the HODL mentality, the DACA, DACA, a mentality, buy a little bit every month, put it away, come back in 5 to 10 years. I think that's the way to build wealth. And so if you're saying, do I think we're going to go back down to the 20,000, 18,000 lows of Bitcoin? I don't see it at all.
Well, joining us on Speak Up is a repeat guest due to popular demand, Tapiero. It's Dan Tapiero. Dan Tapiero on tap. Okay, so I want to get right into it with you. 1 month ago, you and I were talking about the early stage approval of the Bitcoin ETF. We are a month into it, a little bit more than a month. How do you feel it's going, Dan? And what's your insight? What can you provide our viewers and listeners?
Well, I think it's, we see by the market response, it's been a fantastic response. There's been a lot of shifting, as you would expect, from Grayscale, obviously because the fee difference is enormous. But look, Americans like to hold their assets in their equity accounts. And, I think many people, especially older investors who like to see everything on one screen, they like to see, they want to have their broker report to them on how the, account is doing. They want to be offered leverage as well, off of their overall stock account. So I think for Americans, the ETF launch is a huge deal. I think for the rest of the world, it's sort of less of a huge deal. I don't see it influencing cryptocurrency owners in Asia or in Europe, let's say. But one thing interesting that has happened is that apparently of the global volume, the total global volume in the past sort of 4 to 6 weeks, there's been an incremental 10% shift towards the US. So that the US, during US time, Bitcoin and ETH have actually become more liquid. And so that's been interesting, I think, because it's not just the volume that's happened and increased in ETF, it's in all the exchanges and all the sellers, et cetera. So it's been a tide that is lifting all boats in a way. It's sort of surprising to me, but I just saw that data yesterday that it would be such a big switch. 10% is a lot. So I think that speaks well, right? And I think the ETH ETF is really why ETH has been going up as well, because people see the volume and now they're saying, okay, well, Larry Fink has suggested that they might be bringing the ETH ETF. So as you know, markets run ahead.
You get a little bit of verbal pushback from Gary Gensler. He was on CNBC maybe 5-6 trading days ago, pushing back on the notion that they're just going to rubber stamp an ETH ETF. Now, having said that, they lost the Ripple case. They lost the Grayscale case. And for viewers and listeners, that ETF decision has to happen by the end of May. What do you think, Dan? Do you think it's likely that the ETF will get approved?
I can't give you a specific month. They delayed the Bitcoin ETF 10 years or whatever. So I think it will happen this year. And look, there's positive momentum, so maybe May, but I don't have any particular edge in the May date, knowing whether there's a date or not.
So I want to step back because you're one of the world's legendary macro investors, and I want you to give us a sense for the macro landscape right now. Mm-hmm. And specifically, I have two underlying questions to the macro landscape, and that's just guidance on the Federal Reserve. Where do you think they're going? And does it concern you that the top 7 stocks in the S&P 500, which are now known as the Magnificent Seven, represent about 30% of the S&P 500's market capitalization? So what do you think of the macro? What do you think of rates? And what do you think of S&P concentration?
Yeah, so let's talk about the macro first. I think the general backdrop, especially for the cryptocurrency space, is positive. We see inflation coming down for the rest of the year. I think growth has held in better than most would expect, and I think there's the market pricing of what was it, 7 Fed eases early in the year. Even I, who think the rates will come down this year, I was not expecting that. So I think that was a little bit of an extreme. And also, look, the unemployment rate hasn't really moved up yet. Claims numbers are very low. So the U.S. is hanging in there for now, but we know the real estate sector is sort of plagued, especially commercial real estate. And one thing I'm not sure enough people are talking about is, there really is weakness overseas. I think the UK, Germany, and I think it was Japan as well. I think all three registered official recessions in Q3, Q4. That's an official recession is 2 quarters back to back negative GDP, quarter over quarter, annual, seasonally adjusted annualized rate. That's how, and if you have 2 negative quarters back to back, that's the official definition of a recession. So you have three relatively large countries, right? There's probably around over 10 trillion in GDP just there in recession. If you've been following some of the foreign stock markets, the Hong Kong stock market just recently made a 19-year low. I mean, imagine if you're a Hong Konger and you're looking at the NASDAQ and it's at an all-time high and your index is at a 19-year low. So I think that there are some natural speed bumps, global speed bumps out there. China's been soft as well. The real estate sector continues to be a problem there, over leveraged for many years ago. So even if the U.S. continues to grow at a decent clip, I think there's some things offsetting that, and those are probably things also that will prevent the Fed from, let's say, surprising and raising again. Even if the U.S. were stronger, I just don't see there are enough things out there that are taking the edge off of the growth and the inflation, that maybe last year weren't there, right? So I think that's important it's a settled backdrop. I don't want to say soft landing. We use all these terms. They mean different things to different people. I do think that the backdrop generally is favorable for the equity markets. And, you asked me about the top 7. I just think about just take any one of those companies. They're so unique. They're non-replicatable. And that tech in many cases is being distributed throughout the entire economy. So everybody is using it, or they should be in one form or another, tech from one of those 7 companies. And, you look at a lot of the companies in the S&P, you've got, again, real estate, banking, utilities. These are very old line, I don't want to say boring businesses, but they're not really tapping into the potential for growth that these bigger companies can tap into. So I think people, again, I don't want to be a guy, NVIDIA is up a lot. I don't, have any specific view about, NVIDIA. I think the AI bull market, it's still sort of early to me. And I know our space, the digital asset ecosystem, as I call it, it's just started to lift off in the last 3 or 4 months. I mean, some of the areas within the space have just been exploding. The Solana ecosystem has come back to life. The Cosmos ecosystem is doing all sorts of interesting things. All sorts of layer 2s now on Ethereum. Revenues for all of my businesses, as you know, we've invested into 24 mid to later stage companies in the space, companies generally making, let's say, over 40 to 50 million revenue. I would say all of my companies will have their best quarter in Q1 that they've had since the last bull market. We haven't seen those numbers yet. You take a look at Coinbase, they blew the roof off the numbers, those numbers that came out a few days ago. And I suspect Q1 is going to be even better. don't have any edge there particularly, but I'm just saying I know what the volumes are doing. I know what activity in the space is. I'd be surprised if they don't even have a better quarter. And that bodes well generally for this space. The activity's been picking up. And the value now in this whole digital asset ecosystem is $3 trillion. $3 trillion in the value of the currencies added, and then another trillion in the value of all the equities in the space. So it's $3 trillion sitting there. It's still incredible that Gary Gensler thinks that, I don't know what he thinks, that it's for fraud or money laundering or who knows what he thinks. So I see you asked me about the Magnificent Seven, but I see that also connected to our world, right? To the companies and businesses that we're involved with, because I really do see this digital asset ecosystem not completely disrupting banking and the old payment rails, but I think growing when that space is not, if you follow what I mean.
So let me ask the contrarian question,
Yeah.
because I get asked this a lot, and I'd love to get your take on it. I'm bullish on the crypto space. I think we're in early stages.
Yeah.
I do believe the halving will improve Bitcoin prices, and then you and I both know that typically filters down into some of the other coins. It's already filtering into Ethereum. It's certainly filtered into Solana. But the question that skeptics often ask me is, well, what is it that you're not thinking about? What is it that you are not anticipating that could potentially trigger a correction in the crypto space? And, one of the factors that has me worried, which I think worries all of us that have been doing this a long time, is the consensus around bullishness. So, if you look at the bull meters, they're over here in the 75, 80% zone. Now, again, bull meters can be right, and I am bullish. I'll state that publicly. But what could go wrong?
So, I've been trading and involved in markets a very long time. And the one thing that people who aren't in the markets, even people who are, let's say they're in banking, but they're not active in trading and in investing in the markets, what often they miss is that markets are discounting mechanisms. And I think that all the bad news that you could possibly have ever dreamed up happened in 2022. And I think you had a low in Q4 22 that was relatively obvious. So do I think that there's another FTX out there? No. Look, I am, I'm on my firm. We've got 12, we have board representation on 12 of our 24 companies. So I'm seeing a lot of, really interesting information from the companies. And anyone that was having difficulty is now not. And we were not seeing that 3 years ago, 2 years ago. I have companies that really had tremendous difficulty in the end of 22 for the first half of 23. They cut back, they streamlined, they focused on margins, and now they're really ripping. And I think that, so you ask me, what could be the bolt out of the blue? I mean, there always can be a bolt out of the blue. I think if we had a correction in Bitcoin from 50 down to 40 or something, that would be great. Or 35 to 40, shake people out, go sideways for a few months. But I don't think, this too, the big wealth that's been built in this space that has not really come from trading the squiggles. I think the HODL mentality, the DACA, mentality, buy a little bit every month, put it away, come back in 5 to 10 years. I think that's the way to build wealth. And so if you're saying, do I think we're going to go back down to the 20,000, 18,000 lows of Bitcoin? I don't see it at all. It's completely, I think we're in the second inning of this bull market. So I would be much more concerned and think that there were problems potentially if I felt we were in the seventh inning, the eighth inning. The bullish consensus at 75, 80%. I mean, that's an issue, but that maybe just means you have a short-term correction. Um, we're just getting started here. And I can tell you, I can see it from the way our companies are performing, how they're responding, and what they've lived through. I'll just give you an example. One of the companies, I won't give you the name, but I mean, they were threatened with not bankruptcy, but they were on the brink of meeting their maker. They cut back and they survived. And now, actually, the company um, is actually moved into profitability in January. They were predicting that they would be profitable in December by the end of Q1, and it's happened more quickly. They did more volume in the first 15 days of January in their business than in the previous 6 months. So that's not an end of cycle phenomenon, right? It's just starting
Yes.
now.
All right. Let's go to something a little off the topic of Bitcoin digital assets, but more again on the macro side.
Sure.
There is fears of what's going on in China. There's potential property revaluations going on. I don't want to say collapse because I don't know enough about it, but it does feel like there's revaluations happening in China. I think you and I would both look at the commercial real estate market, particularly in the urban centers, and say that they seem to also be at risk. There's high vacancy rates. Could this pull the U.S. into a recession and cause the Fed to move more quickly? Certainly not 7 cuts this year, but could they be forced to reverse as a result of this stuff?
So I think it's already happened. Like the fact that the Hong Kong market is priced at a 19-year low, it's happened, and the U.S. is where it is. I think China has caused a lot of their own problems. The leadership there has come down very aggressively against some of the capitalist leaders. I think a lot of their problems have come because foreign capital has been leaving now for several years. I think really since the moment Jack Ma disappeared for a few days or a few weeks or whatever it was, that was really the moment where I think large foreign investors started to say, wow, Alibaba is a fantastic company. Why would the leadership of any country do anything to dissuade that company from being able to grow and prosper? And that was the moment, I think, where people like the switch flipped. So I think it's a little bit of a liquidity shortage there. Look, it's a closed economy. They can cut interest rates. They can add liquidity. The currency doesn't really trade internationally. It's more or less pegged to the dollar and the euro. So there aren't necessarily any repercussions for them in debasing the currency, right, by doing excess spending. So I figure that's what they'll probably end up doing again. At some point, eventually maybe they have to pay some piper. But I think the way that they get penalized is you have capital flight. I don't really see it hurting the U.S. It's already happened, and the U.S. is still doing just fine. And I just don't, those linkages, those macro linkages that I think used to be really tight in the 90s and 2000s, for instance, I just think are not as tight anymore. Partly because I think tech is doing something underneath the surface to productivity and efficiency that is very hard to measure from a macro macro basis. Like I know we have productivity measurements that come out, the Fed releases, or there's official data, but I think it's very hard data to capture. Yeah.
Well, I appreciate you chiming in on these things because this is stuff that viewers and listeners ask us about. And since you were so popular last time, I wanted to bring you back, Dave. Let's go to questions. I got a ton of questions for you. This is from Ken from Oklahoma via email. How do I play this upcoming bull market with crypto? would it be the ETFs or would it be individual stocks? What say you?
Yeah, I get asked this question quite a lot. I think there's only really one stock, public company, and that's Coinbase, and actually Galaxy as well. It's more volatile. It's a smaller company, but if you wanted to have a proxy bet on the space, like the entire digital asset ecosystem, I think Coinbase is turning into a crypto blockchain Web3 digital asset conglomerate. And they've launched, they've rolled out their base token. They've diversified their revenue from trading revenues, which people 2 years ago thought Coinbase couldn't do it. And actually, they have been doing it. The leadership there has been very effective, very focused. If you wanted to just own Coinbase and walk away, I think, 5 years from now, you'd be very happy. Probably even during this next bull phase, I think it certainly has the ability to double in price from here. I think that's an easy call over the next sort of 18 to 36 months. The ETFs are also easy. Again, if that's what you're looking for, I think an investment in Bitcoin and ETH, you can go to Coinbase and get a wallet and buy Bitcoin and ETH through that way, which is, I would suggest that because it'll give you more visibility into some of the different developments going on in the space. If you just buy a Bitcoin ETF, that's it. It's in your stock account. You're not really learning anything. You're not like being opened up to some of the new innovations in the space. Whereas on Coinbase, if you have a wallet, you're also, you get opened up to all sorts of information and other cryptocurrencies. I'm not suggesting you need to play other cryptocurrencies. I think Bitcoin and ETH are the core assets for this world right now. And everything else is essentially a venture project. Maybe Solana is sort of moving now to a place where it's in between venture and established asset. I say established just that it's reached network effect and Metcalfe's law has kicked in. In terms of how one buys it, I would just, as I said before, I would buy a little bit, every month and, do that for, a year. That's how I would play it.
Well, yeah. One of the, not to talk our book at Skybridge, but there's an ETF that we developed with First Trust. It's called the First Trust Skybridge Crypto Industry and Digital Economy ETF. The symbol is CRPT. And Dan, just a couple of holdings in there. Coinbase is a quarter of the holdings, but so is things like MicroStrategy and Marathon Digital. So Galaxy's in there, HUD 8's in there. It's just another idea for people.
I like that, but Anthony. Again, I think it's a good idea. It's a little Bitcoin miner heavy, probably, but it gives you nice diversification. That's a nice ETF. I've got to write it down. What did you say?
Yeah, it's so it's CRPT.
Okay, CRPT.
It's just a way to, we're getting some institutional demand in there as well. Just a way for people to tap into those markets. Let's go to the next question, but that's a great one. The new evergreen venture funds that aggregate hundreds of startups together seem like the next generation mortgage-backed securities that will form a bubble and eventually burst. This is from David via email. And so it's an interesting question. I don't know how familiar you are with those. I'm happy to chime in here as well. But you are getting these venture funds now that are creating closed-end funds, and they're aggregating small startups. And then, obviously they'll make distributions as those startups mature, potentially IPO or sell and so forth. What are your thoughts on early stage venture, Dan?
Well, I always say about venture, the style is you make 10 investments, 9 go to zero, and hopefully one ends up being Google. I think it should be some small percent of your portfolio. I'm not, I'm coming from the macro background. I like to make bets on sectors, bigger bets that are going to move less, that you can control the risk on a little bit. So I think 100-year, how long are these funds? You say 100 startups together?
Well, yeah, they're closed end. So they
10-year
Yeah, they're
10 year
closed
life.
end. Yeah, they have typically 10-year life, but they're also, they get listed and then they can be traded out of. But you and I both know that these things have a tendency to trade at discounts to what their actual underlying holdings are. And so I think, David, for me, I would stay away from this only because it's very hard to understand. And I think your hunch is right. You could get a bubble run going there, and you may not even be able to get out of these things in terms of where the liquidity is. And so let's go to the next question. So this is an interesting question, and this fits into the GBI narrative.
Yeah.
How is bullion delivered, and what is the charge for the delivery?
So I'm not up to date like as of today, but actually a lot of bullion is actually just sent in the mail. I mean, FedEx, believe it or not. I mean, smaller amounts. I'm not sure on much larger amounts. I know that GBI does deliver to, I think, over 100 different countries. And so, and I think the delivery also, I think, tends to be insured as well. It's a very small extra charge for delivery. So I don't want to say it's de minimis, but I think it's very easy. Yeah.
What we'll do is we'll post the link. You can contact our partner at Hard Asset Alliance, and we'll post that link below. And they'll calculate the shipping costs based on value and weight, and of course the insurance. But the good news is exactly what Dan is saying. The sets that you want bullion delivered, it can be delivered safely and quickly, and most importantly, it's insured. So, excited to get that question. Actually, let's go to the next one. What is the best, most secure crypto cold storage wallet in your opinion, or experience, or knowledge? This is John from Arizona. I'm going to flip it over to you, Dan, because I'll just, very candidly, I have all of my my Bitcoin at NYDIG, Coinbase, and Fidelity. It's blended between those three.
Yeah.
And of course, I do own some BlackRock. I own the BlackRock ETF.
Yeah, for
the Bitcoin ETF.
For pure cold storage, I mean, I would put it on a ledger. I am biased. We have a large investment there, and I do sit on the board. But 75% of the entire hardware wallet, cold storage wallet market is dominated by Ledger. There's another, Tezos, of course, is the other 20% or so. But I think Ledger has made tremendous strides. They're going to be coming out with a new hardware wallet soon that is going to be a next generation wallet. So I would look out for that. I think it's Anthony, for the cold storage at, let's say, Coinbase, if you want to just call it, not on the actual exchange. I think that's more for institutional size clients. So I'm not sure. I'm not sure what the limits are, but you can buy a ledger and you can have $100 of Bitcoin on there and put it in your pocket, and it's yours and it's secure.
All right, well, there you go.
Yeah.
That's why we got you on the show, Daniel. That's why we got you on the show. Let's flip over to another question.
Oh,
it's a good question. I'm gonna cede this to you.
Are you sure, Anthony?
Probably have a, you probably have a different view. Yeah, no, you have a different view than me. That's what makes the show fun.
Yeah,
who's better for crypto, Trump or Biden?
So
I just want to point out to everybody, Trump has said repeatedly that he hates Bitcoin. But go ahead, go ahead, Mr. Tapiero.
But Trump is the first president in my lifetime that I can remember who even knew where the S&P 500 was. And, as much as I think we probably all, during his presidency could have used a break from the constant updates on Twitter, etc., he was very sensitive to the markets. On a great day, he would, come out and say, hey, we've had a great day. The market's up. What am I doing well? On a bad day, he would look around and try to figure out what was going on. He's very market. He's a capitalist. I don't want to, get into a debate about all the other stuff that's in the press and bad, good, bad, whatever it is. So I think he's generally pro-business and pro-growth. and, wants America to be a leader in innovation and technology. I think I could say that. Biden is just not present. He really is too old for the office, and I don't think he even knows that. He doesn't know anything about Bitcoin or ETH or digital assets. I'm sure he has people on his team who do, but I just think they're checked out, unfortunately. So there's no discussion on this one for me, Anthony. I don't know what your
okay. All right. Well, you know what? You know what? Because you're the guest on the show, and I'm pretty sure that anybody that's listening to this show knows my opinion, I'm going to leave it there, right. Daniel. How's that? I'm going to leave it there. Let's go to the next question. All right. There's a big one. Spring training starts this week. Who do you pick to win it all, and why won't it be the Mets or the Red Sox? There's Mike from Connecticut, Dave from Boston. They're in our control room, these two losers. They actually think their team has hope. At least I'm smart enough to know, in the immortal words of Nelson Figueroa, the Mets are obviously playing on a Native American burial ground until they get a shaman out there to spray it with holy water or something like that. Kodai Senga, they shut down Kodai Senga this week due to a bad MRI on his elbow. So I know the Mets are not going to make it. These two hopeless, sad sacks, Tapiero, they think that possibly the Red Sox could make it. And what say you?
Well, I've been a Yankee fan for a long time, but with the coach that we have now, I've been complaining about him for 3, 4, 5 years. They still don't want to replace him. I don't think it's going to happen for the Yankees, unfortunately. Even the loaded.
What about the Red Sox? What's your view of
the Red Sox? I just, I'm such an anti-Red Sox person. I don't think about them. I certainly don't ever think about them winning. The Mets are a little different. Of course, I worked for Steve Cohen for about 10 years, and I would not underestimate Steve's ability to build a winning lineup. He's tremendous longevity.
I agree with that, but I want Steve to hire some medicine man to go out there and fix the field, though.
Well, just
because I'm watching balls drop. I'm watching unexpected injuries. We got to do something to change the mojo. But I love Steve. Full disclosure, our fund has a big investment in Point 72.
Yeah, I think he's a different type of owner. People thought he was just going to come in and spend big. He's changed his focus a little bit. Again, I have no specific knowledge here, and I'm just an outsider watching it. But I did sit next to him on the trading floor for probably about 5 years in total, if I think about it. So I think he figures out a way to win, and that's what I would not. In the next 3 years, I wouldn't count them at least making it to the series. And I know that's a bold call.
Well, let me tell you, it's music.
They need a medicine man out there.
Let me tell you, it's music to my ears. Yeah. You know that. I'm living for the day. I have low expectations now, Dan. I just want the Mets to get there. Before I die. That's it. That's all I want. Okay.
Yeah.
So I've got another one of our producers saying the over-under on the Mets is 82.5. Over-under on the Sox is 79.5. Neither go very far. It's going to be a long summer. We'll have to see. But you're terrific to join us again. And
anytime.
Just want to thank everybody for joining us, listeners from all over the world. With Dan Tapiero today to speak up with Anthony Scaramucci. Have an awesome weekend. Please send us feedback, comment on the show, send us your ideas, email us your questions. We're adaptable. We're making this show for you. And the deep dive discussions, we're all learning something. Very grateful to have your participation. Have a great weekend.